So Fed Powell said there is no hurry to continue to reduce interest rates, and that did spook markets a little bit. But let's take a closer look at what he had to say and the effects on the markets. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fed Powell came out and said he is in no hurry to reduce interest rates. The US economy continues to be strong, which is kind of debatable, but it's held up pretty well. The consumer is doing fairly well at least. And they say the economy is not sending the signals that they need to go lower faster. And honestly, this should be relatively upbeat for markets, kind of reassuring to markets that the economy is still doing well. We don't need to rush down to interest rates. If we were in those conditions, I think the market would be cratering. So honestly, I thought this would be a little bit better for markets, but markets did not take it super well. They cite here the job growth has been a little bit disappointing, even though you can attribute some of that to storm damage. Non-farm payroll is increasing by just 12,000. You could also throw in the Boeing strike. We talked about it when these numbers came out. But he did cite that the fight with inflation is not quite over. We're not at the 2% rate yet. Food and energy is at 2.8%. Excluding food and energy is at 2.8%. The preferred metric is at 2.3%, which is still a little bit higher than that 2% long run goal. They say they are still committed to finishing the job, even though it's been a little bit of a bumpy path. It's also worth mentioning that they did say they were going to cut 3 times this year, and so far we've gotten those 3 cuts. They did 2 on the first one with the 50 basis points, and then they did 1 more 25 basis points. So that's brought us down to the target for the year. So maybe they skip in December. Right now, Fed futures do not quite believe that yet, but we'll see how it plays out. And he did say getting to that neutral rate is a little bit tricky, and how they are navigating it can be challenging. So going a little bit slower and getting more data could be the smart thing to do. Moving over to fear and greed, down to a 60 from a 67, pretty substantially down day. Markets rolling over fairly aggressive. Strength still in fear. Breadth moving lower today into extreme fear. Put call ratio spiking up like we thought that it was going to. It was in a very, very low level, basically as low as it goes, indicating a top in markets and that we were going to roll to the downside. VIX moved a little bit to the upside, but not a lot. And then safe haven demand rolling down here in regular greed. Junk bonds still not moving. Moving over to seasonality, you can see this is a seasonally bearish period here from the 14th up until the 21st. So still looking at that bearishness, really bearish from the 7th all the way to the 21st. And that is seemingly what we're getting. Obviously, we got those spikes with the election, but now we've kind of topped out and we're seeing this kind of sell off here up until the 21st. Then we should see that Santa Claus rally style move into the last couple of weeks of the year. We'll see how that plays out. But for right now, slightly bearish. Moving over to the Fed futures, you can see they came down about 20 points for that 25 basis point cut. We were at 85 yesterday, back to a 65, which was what we were at 2 days ago before the CPI data. So interesting. Still likely that we're going to get the cut. We'll see how that goes as we get closer to it. Still plenty of time, still a month out. And then looking at January, markets still think we're going to get just that 1 cut. So either we get it in December or January, and then we'll see what happens. Most likely is 1 cut and then a pause. Moving over to the economic calendar, you can see continuing jobless claims a little better than expectations. Initial jobless claims a little better than expectations. PPI in line, just like the CPI. Previous month-over-month number was actually revised up a little bit. Not what you really would have wanted to see there. But overall, nothing crazy today. And then for tomorrow, we do have that core and headline retail sales. Definitely going to impact markets. And then Atlanta Fed GDP for Q4. Fairly interesting, but really just the retail sales. Moving over to Max Pain, still at 580. Has not moved at all. Stock price continues to get a little bit closer to it. For today, Max Pain was a little bit above it at 597. Markets did move down, but for tomorrow, remember that 580 level, much, much lower than price. We'll see if we get that big dip down into it. After that, it's relatively bullish the week after, and then bearish here for 11 days from now, down 10% from current price. So it's definitely a little bit concerning. We'll see how that plays out. But then you could argue the 12th day here up 2.5%, which would be much, much higher than the previous. So very concerning there for that 11 days from now, as well as tomorrow's session. Last time we had a 2.5% or so Max Pain that was lower for a Friday session. Markets did go down fairly substantially. So just a little bit of a concerning thing to watch out for tomorrow. Moving over to the chart, starting off with the S&Ps, it did exactly what we thought it was going to do. Finally got that continuation lower, 0.64, headed towards that 9 EMA at 590.84. Got the trend here as well at 590.30. So about $3.5 lower is what we're expecting. Momentum bearish, RSI pulling back to the SMA at least. So another step down. It's after hours down about $1.30, which is pretty substantial for the after hours. So market's saying we're going lower. Everything continues to fit with the thesis. Been saying it for a while. Now we're finally getting that bigger continuation here. Realistically, still expecting it to be something like this, where you get the big down move, come into the area of support, get the continuation higher, unless it breaks through here, which we haven't seen yet. And then looking at it here on the short time frames on that hourly chart, it was basically straight down throughout the session, headed towards that 144 EMA. So everything continues to play just like we thought it was going to. 144 EMA in line there, 190.60, and then the trend just below it, 190 here on the hourly. Momentum bearish, volume bearish, big selling volume, just like we talked about yesterday and today. So everything continues to look a little bit bearish here as we head into those zones of support tomorrow. And overall, this still fits with that max pain thesis. If we did get that finish, that's all the way down here. I don't necessarily think that that's going to happen, but from the closing price, that's about 2.25% lower back into this area here. So see how it plays out. It's not impossible, but I still think it's unlikely. Moving over to the SPY here on the Tasty charts, you can see we are in bearish conditions now with that final candle of the day being a really strong down candle, closed below the ATR, so bearish conditions. Your support right now is that 55 EMA that is at 591.73, just below current price. After hours, we're already touching it. You can see that here. Current price 591.88, really right on top of it. Volume, selling, everything looks bearish. Lowest ATR band there at 588.30. You can see the band starting to roll to the downside. Looks very similar to this kind of structure here, where you start to see it roll, hit that lowest band. Eventually it'll go lower, but at least for now, maybe we're in a zone of support. Your next one is the 89 EMA at 588.30. Either way, everything looks a little bit more bearish here today as we expected it would. Moving over to the NASDAQ, very similar thesis, down 0.69. It's right at the trends here on the closing basis. The after hours is pretty aggressive. I wonder if there's something going on that I'm not tracking, but after hours we're already at 506.74. Looks like we're probably going to get the gap fill now, 505.50. Momentum stepping down. RSI going to touch that SMA tomorrow. We'll see how that plays, if it's going to hold up in there. It's already in those zones of support that we talked about yesterday at the trend. Touch this one, already touching this one here in the after hours. 507.05 is what it would be. If this zone breaks, your next trend is sitting down here in the 502.20 area. So we'll see how that plays out. And then below that, you got the 21 all the way below the 500 level. So that is sitting at 498.83. And then looking at those short time frames, you can see straight down throughout the session. After hours is really what's spooking me here. During the session, I expected just about this to happen, get into these levels here, but after hours continuing to sell. This might continue to sell into the pre-market. See how aggressive that gets to be. Again, level 503.50, 200 SMA sitting in there as well, 502.80. This is the zone where we would expect to find some support. Then we'll see what happens once we get here. It's worth mentioning we're already oversold conditions at a 26.82 on the hourly chart, so big moves down during this session, getting into those oversold conditions. Maybe we find a short bounce and then continuation lower, but either way, expecting support to come in around this area here. Moving over to the Tasty charts here for the Qs, you can see we're already almost at those lowest ATR bands. That's when you start to see this kind of slow down a little bit. We had the big breakdown. We're in bearish conditions, but this is the zone where you would expect support to come in at that 505.65 area, right in here. Momentum bearish, volume accelerating on the selling. Everything looks terrible. But again, 505.65, and then your support below that would be the 89 EMA down at 503.39. Something to watch in there. Pretty much the same as what we talked about, but either way, might find a little bit of support, and now we're in bearish conditions. Similarly here on the Russell, down 1.35%, got into my level here, 232.09. Again, after hours down about 50 cents or so. Ended up closing below it, 231.94. Momentum bearish, RSI crossing below the SMA. I decided to dip my toes in here. We'll see if it ends up playing out. I can always roll down and out if I need to. but if this starts to accelerate, I'll probably just take it off. 3 big down candles in a row. Usually you see a little bit of a reprieve after a move like that, so we'll see if that comes to fruition. Might just accelerate continuation down to this 21 around 226.50. Certainly a possibility. Maybe it round trips all the way to fill the gap down to 224. Seems less likely, at least in the short term, but nothing is impossible. And then looking at the Dow, same thesis as pretty much everything else, down about 0.5%, falling after hours. Looking for that 9 EMA and this previous top here around 432, 433, somewhere in this area. The 9 is actually sitting up at 435. I would expect it to push through there and touch this previous top at least. Then we'll see what happens after that. Is it going to bounce in here, or is it going to push down to the trend around 429.96, 430 or so? Moving over to the Mag 7. Mag 7 doing exactly what everything else is doing, falling 1%. It's been trailing off. 9 EMA sitting there, 293.81. Current price 297, so just a few dollars lower for that touch, and then 290.65 is the level we're watching. Momentum stepping down. RSI, it's going to touch tomorrow. We'll see how it plays out. In my opinion, if it bounces from there, we get a little bit of a reprieve, maybe a double top or a slightly lower high or something, some kind of reprieve off this down move. It's been basically 4 days in a row of downside. Not a big move, but definitely considerable. Waiting to see if we catch that bounce and then see what happens. Is it a topping pattern, or do we get a continuation up? Maybe hit some of these trends in here around 313 maybe, but either way, right now short-term bearish still. Moving over to Apple and Microsoft. Apple getting that continuation that we talked about up to that 21 EMA. That was the target. If we push through that 55 EMA, we said momentum was swinging to bullish, and it was. RSI right at the SMA ended up breaking through there. Now the question is, do we hold here or push to 230.28? We talked about the low, higher low setup, 9 EMA as your zone of support. Ended up gapping right to that 9 EMA and then going higher. So right now, Apple looking a little better, acting as a safe haven, up 1.38% when nearly everything else was not. And you got Microsoft doing the same thing, pushing towards that 429.88 area. Threw a big wick to the lows, down to 420, touched that level and then bounced. So it was actually a pretty wide ranging candle. You can see that here on the hourly chart. Big wicks down all the way to that 200 on the hourly. We didn't look at the hourly yesterday, but this is what you would have been seeing, hitting this trend. That was support. It ended up holding these zones, but overthrowing it really dramatically and then pushing up. After hours, tapering off a little bit. Really no change to the thesis. Want to see it break that 429.88 area if it's going to go. Otherwise, that's your current resistance. Moving over to Tesla and NVIDIA. Tesla continues to fall. Had a down day, had a slight inside candle, and then a big down day, 5.7%. Broke all the levels. Your next support is down here at 302, right in that vicinity, 301.20, 301.90, somewhere in here. Let's go ahead and zoom in, give you a hard number. Right here, 144 EMA, 302.28. You got my level, 301.93, and then the trend just in that same zone. So right around 301.90 is what I'd be watching. It's oversold on the hourly, so something to watch there. But this is a sell-off. If we did get a bounce, I would look for a lower high setup and then a sell. And then looking at NVIDIA, continues to chop in this same trading range we've been in for about a week now. So slightly bullish candle, but no change to the structure. Sideways consolidative, waiting for a break one way or the other. Moving over to Amazon and Alphabet, both of these going lower today. Amazon down 1.2% after the breakout to all-time highs yesterday. Nearly round trip the move, closed back below the level. So not super great. Definitely extended. It was also overbought there, so that wasn't great either. And then Google finally round tripping that move a little bit more. Broke down. This is a sell now to that 21 EMA is what I would be looking for, down at 172.61. Not a great candle. Glad I took this position off yesterday with the sell. So I was not in it. This would have been a little bit frustrating, especially because I thought we were going to push to 185. Ended up gapping down and falling yesterday, falling some more, breaking levels. Filled this gap, potentially going to come all the way down and fill this gap. Momentum bearish, RSI bearish. Looks pretty terrible, at least in the short term. In the medium, it still could find some support here. You do have VWAP 21, 144, some definite levels of support to the downside, where you could say maybe this goes higher over the next couple weeks. But over the next couple days, I would expect it to go lower. Moving over to staples and discretionary. Staples continuing to outperform, continuing to see risk off over the last 3 days. Discretionary is down 1.42% with Amazon and Tesla falling, driving markets lower. It's still at the level 215.06. If it's going to hold, it needs to do it here. Otherwise, we're pushing down to 212. Maybe my level here, 210. And then below that, the trend is all the way down at 205. So right now, I think this is probably going to break. Momentum stepping down, RSI right at the SMA. We'll see how it plays out. Either way, staples holding up a little better here in the short term. Moving over to oil and gas and transports. Oil and gas continues to do well. This is one of the positions I'm in. It was up 0.6 today. Everything looks good there. Still can't quite get above the 200, but either way, I have a covered call that's expiring tomorrow at 142. I would like to get rid of those shares and get executed on that covered call, get the max profit on that would be the perfect position. Might take it off a little early depending on how price action goes, but this is a safe haven, so it should be doing okay in tomorrow's session, especially if stocks continue to sell. And then you got transports forecasting a little bit more selling. The trend is in here at 72.94, somewhere in that area, 73. 9 EMA just below it, 72.62. Momentum bearish right at the SMA again. Probably going to touch it tomorrow and then we'll see what happens. Pretty common thesis across markets. Moving over to 20 and 50-day breadth. Breadth continues to crater here. We did get that kind of head fake on 50 where it bounced just slightly, but nothing crazy. It did get the continuation lower here today. Again, looking for a touch of those SMAs on the RSI in both cases. Then we'll see what happens from there. Is it going to hold that higher low? Hard to say at this point. You would guess that it would, but this momentum step down, it might actually accelerate a little bit more, and then we'll see what happens from there. Either way, short-term bearish, waiting to see where we can find some zones of support. Moving over to the dollar. The dollar continues to be an absolute monster, going up every single day. Look at these stacked candles, 5 days in a row, absolutely massive, hitting the level 106.84, technically closed above it, looking to push to the trend here at 107. Just to give some context, we're back above the highs here from April as well as June. We're getting into this zone here from October of 23. That was a big bottom for markets. Once the dollar turned off of that level, equities started to rally pretty aggressive, but now we are back there and equities are much higher. And let's go full screen on this to give some more context. You can see in this zone, we're at these levels. If it starts to break out, this was a terrible time for markets when we were getting into this 113 area. If the dollar continues to rocket, I think that's really going to start to put some cracks in the foundation of some of these stocks. Stocks have not responded to this dollar rally yet, but I do think that this will be a problem, especially once we start getting into those Q4 earnings in the new year. Moving over to bonds, really no change to the thesis. J&K continues to sell, broke the level 96.50, continuing lower here. So you have a high, lower high, depending on how you look at it, maybe double top here. Either way, we're selling again. Momentum stepping to bearish, RSI below the SMA, expecting some more selling into this zone here. And this is forecasting some more selling across markets, risk off environment. TLT, on the other hand, still in the same trading area we've been in for a while. We got into the same range on the 1st of November, and we're still kind of here around the 14th of November, so about 2 weeks in the same zone. Maybe slightly lower, but really very little changed. Moving over to the VIX. The VIX was positive 2% on the day through a wick to a new low. Momentum stepping to bullish for the first time. That is definitely concerning. With that momentum starting to step towards the bullish side, usually when that happens, that does give you a pretty good swing here. Occasionally you'll get the fake out where it just continues lower, but not super often. You can see most of these have a pretty decent follow through. So first step to bullish, waiting to see what happens here. I don't know if we get all the way back up into that 22 area. Maybe we could hit some resistance in here around the 18 to 20 range. But even if we did get a spike like that from here, that would definitely signal some bearishness to come. Maybe an acceleration to the downside, a little bit of a capitulation move. We'll see. Moving over to my accounts, I did fine. I lost like $40 on the day. I think I was at $390 yesterday, so I'm at $350 here today, so lost a few dollars, nothing crazy. I did put this IWM position back on at 232 for 70 cents. We are already at that position here in the after hours, so that was a little bit concerning. Like I said, I can roll out. I'll be watching it closely. I might just take it off, especially if we do get a kind of acceleration. We were in a zone of support. It seemed like we were catching a little bit of a bounce from there. Maybe I was just a little bit ahead of myself, but I'll watch it. Otherwise, XOP position, doing great, making money there. Shares are in profit. Covered call is in profit. Everything's working out perfect. And then looking at the Qs, again, still plenty of protection. 505 covered call for tomorrow. That's it. The call is in at $1,300 profit, and most of that was here today, so still plenty of protection there. You can see another $700 left out of that 2K, which should cover me back down to that 505 area. Again, I can roll out. If it starts to crater, I can take it off or just leave the shares on. The after hours price action is almost already at that position. It was at like 506, 507, so right in that range already. Either way, still playing with some protection. I can roll this out and down if I need to, if markets get a little bit concerning, but either way, for now, looking okay. going into tomorrow's session. Moderately bearish, still playing protection. Let me know down in the comments section what you thought of FedPal's comments. Did he say anything that concerned you or that was new? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.